Hi there, this is Dennis Wells with Wells Funding, and by now you have likely seen that the unemployment numbers that came in from last week were about 1,000 times higher than normal. Usually we see about 260 to 280,000 people apply for unemployment for the first time. Last week it was over 3 million. Obviously that is pretty astounding and has to cause economic repercussions. And one of the questions that is being asked, because a lot of things you're seeing on the news today, is should I skip a mortgage payment? And the answer to that question really is, it depends on your circumstances. So I wanted to take a few minutes on this webinar and answer this question for you, depending on your situations, and hopefully give you some insight as to where things are and how you should proceed during these uncertain times. So there are a lot of people right now that have applied for unemployment whose jobs have been either eliminated or severely cut down. But if you're still working at your job, roughly the same hours, making about the same money, my advice to you is make your payment. Okay, and the reason really is simple. Good things happen to you when you do the right thing. Obviously this is a terrible time for the economy and for a whole lot of people, but if you're in a position to make your payment, you need to keep doing that. Okay, there are some things that you can consider. I mean, if you're still working on your job, you might want to consider a refinance. You may be able to lower your payment. You may be able to pay off debts and increase your cash flow. You may be able to take cash out of your home and build up an emergency fund of 3 months to 6 months to give you that added cushion as you move forward. Obviously, not everybody is in this position, but if you are and you're fortunate, I would definitely take a look at this because realistically, you look at the equity that people have in their homes, and it's quite substantial. Prior to the 2008 crash, people were using their homes as ATMs, and they took out $824 billion out of their homes in 2005, 6, and 7. Whereas in 17, 18, and 19, people only took $232 billion out of their homes. So there's a lot more equity that you have right now to take advantage of if you're in that situation where you still have a job, and we can talk about doing that. But keep making your payments. Now, maybe your work hours have been reduced. If you're in that situation, you're not as good as you were before, but you're not totally without income, I would say prioritize. Make a list of the things that you really need and make sure that you're eliminating expenses that aren't necessary. We got to prioritize food. You can survive a little while without water, but eventually, without food, you're going to not do very well either. So food is number one. Housing is number two. Utilities is number three, which can kind of be rolled into that, the housing sector, and then your other bills. Believe me, if you have to put off paying some of your credit cards in order to make sure that you're making your mortgage payment and that you're making your your utility payments, you have food for yourself and for your family, you're going to be doing much better than if you kept up with all those cards but got behind on your mortgage. Maybe you've been laid off and furloughed. Make your payment if you can. You may have emergency funds. You may be able to find employment in some of the sectors of the economy that really need people. I know that they're talking about expanded unemployment insurance and those kinds of things. Again, prioritize your payment there, but make sure that you're that you are doing everything that you can. And you may be able to weather the storm and come out stronger on the other side. If you've been laid off or furloughed and cannot afford to make your payment, call your servicer. And the servicer is the one that sends you a bill every month that says, here's what your mortgage payment is and here's how to pay it. Call them, discuss the process of putting your payment in forbearance if you absolutely cannot afford your payment, because there will be a process, and the time to start is now. Don't wait until you get the middle of April and decide to give them a call, be proactive, and get going on that now. And then the very worst case scenario, sell your house. I would not encourage you to do this unless you absolutely have no other options. But again, houses have been appreciating substantially over the last several years. Not as much as they were before the crash, but 4, 5, 6% over the last 5 or 6 years. Americans have a lot of equity, just like this other slide that I recently showed you about the amount of equity that people have in their homes. You don't want to get behind on your mortgage and have the bank take your home when you have money in your home in equity. So if you can't do anything else, talk with a real estate professional, put your house in the market and sell it. Even if you have to be aggressive with the price, you could still end up with money to go to your next situation, whether it's moving down or maybe in an emergency fund and renting someplace until the economy turns around. But ultimately, in all cases, we need to have hope. Okay, this is not the end of the world. We will get through this together. We're Americans. We've faced so many things in our history. We've won 2 world wars. We've defeated communism. We have gotten through 9/11. And just like 9/11, this crisis is going to make us stronger. It's times like these when we're not Republicans, we're not Democrats, we are Americans, and we're working together to get through this. Yes, right now we're having a hard time, but everything is still in place to ramp up as soon as this crisis is over. We're having a tough time in Q2, but Q3, Q4, going into 2021 is going to be a strong time. So we need to hold on. We need to work together and move forward together. In fact, Wells Fargo's Investment Institute said we do not expect a repeat of the severe recession of 2008 and 2009 because the virus and the oil shocks are not endemic to the financial system, but are external. So once this virus peaks and goes away, we'll be able to gain momentum quickly. And just to remind yourself that other than 2008, which was caused by the housing sector, every recession that we've gone through in the past, housing prices have done fine. Even in 1991, where they dipped just a little bit, they still came back quickly, and we were able to recover from that. All the other recessions, you've seen 6%, 4% year over year increases in housing values. At Wells Funding, we want to be a resource for you. My name is Dennis Wells. You can call us at the office 219-230-8400. You can find us on Facebook at Wells Funding Maryville. And you can email me at dennis.wells@midwestequity.com. We're here to help you. We hope that everything is going well for you, and we know that together we're going to get through this crisis and be stronger. Thank you so much, and have a great day.